traders, this is Blake Morrow. You are listening to the Morning Edge webinar. Sorry about that. I got in a fight with my coffee maker. Uh, uh, yeah, good news is I got fresh coffee. That's the good news. Bad news is I lost. So initially, okay. So we're going to get started with our morning analysis, and I was giving you a little view here of the euro dollar, longer term charts, which that's like a daily view. Here, let me grab the. Oops. That's just the bias chart there. Okay, so if you can see the euro. One thing that I'm expecting with the euro dollar is I'm expecting a pretty big move out of this this triangle. I would also caution you getting too aggressively long or short while you're inside the apex of this triangle. Yesterday we had a really nice showing. We had a really nice showing with the dollar, but there was no follow through, and that shouldn't be too surprising. Just because, like I said earlier, the last couple of days, you kind of got to throw technicals out of the window right now. Everything's running pretty much emotion based at the moment, and you got to fade the extremes, if you will. And right now we're just getting a lot of consolidation, and the consolidation is going to be whipping back and forth all over the place. So, if you look at the euro dollar right now, I think any move back up towards 113, we'll just say, like, I don't know, 113, maybe 30, and 113 and a quarter. That'll probably not be a bad area to be on the short side of the euro if you want to, look for some resistance up there. We are in a range, okay, and we'll write down 112.35 as support, and below that, I mean, you might get a dip below 112, but I wouldn't expect much more follow through than that. But I will write down 112.35 right now. Okay. We are in a range. Let's take the cable. All right. So the pound's actually holding up pretty well. Despite the big move that we've seen over the last couple of days. Here, I'm going to get rid of some of this stuff, just some of this mess. I'm going to keep that. Let's get rid of that. Let's get rid of that. Okay, so you can see that just from the low to the high, we've actually held the 24% retracement, which then also tells me that 146 is really key support at this point. Because if we break through 146, we'll probably see some, more aggressive profit taking, should we get down there. But that comes in at 146, and I think 146 is going to be pretty key support here for today. Okay. Now rallies above 147, to anywhere towards these highs, probably going to find some sellers. It didn't surprise me that we pulled back from the highs. I still have, by the way, a small short in the cable. I'm short from 2 days ago, and my cost average is 146.72. Okay, so I'm out of the money 20 pips, and it's small, so it doesn't bother me a bit. But I can see it spiking up towards 147 and change here. We might be trying to develop some sort of head and shoulder pattern, but 147.15 and then 147.80. Resistance, and we are still in a range. We just are probably at the upper end of a range, and I think the market pretty much expects the market expects at this point in time that the UK is going to remain. I don't think there's a real fear in the market that there's going to be an exit. Okay, now you may agree or disagree. You may say, well, God, based on the people that I talk to, everybody says that, we're looking, everybody's looking for, why is this, hold on, damn it, You guys gonna give me a break or give me a second here. I gotta restart this. As I'm doing this, just bear with me. So, you may have other people that say, or you may believe otherwise, and you may be saying, well, based on the people that I know, I think that we're gonna leave, or yeah, I agree that everybody's gonna stay. It's overwhelming that people are saying they're gonna stay, they're gonna vote that way. It doesn't matter what your opinion is at this particular point. Okay, the market really does not fear much of the risk of a Brexit at this point. And you can see it in the pound. I mean, the pound's obviously bid up. You can see it in the euro. It's bid up. The commodity currencies are stronger. Obviously the outlier is if there's an exit. I mean, the markets are going to come unglued. It's going to be nasty. I really don't think that that's going to be the case. I just think that the market is really fearless at this point. And probably, like I said, and in my opinion, it's rightfully so. I still think that the UK voters are going to chicken out when they get to the polls. The guy on CNBC earlier this morning, the European commentator, he showed like two European or British tabloid papers, and one said, vote with your head. The other one was vote with your heart. And I think that's what it really comes down to. It's, for a lot of UK voters, and I'm generalizing here, I'm not saying that this is the way you feel, especially if you live in the UK. I think a lot of people are thinking, okay, in my heart, I feel we'd be better as an independent, Britons, and in the UK if we were independent of the European Union. But it's probably best for us to stay. Right? So most people are going to bet with their head versus their heart, is what I'm trying to say. And I think that's the general consensus at the moment. Yeah, in theory, leaving the EU sounds like a great idea, and is it going to make it better for this, and this reason? But do we really want to rock the boat? And I think that's why that when push comes to shove, I think that the UK voters are still going to vote to stay. But again, I think the market feels that way, and fearlessly feels that way too. So that's why I think that if there is an exit, it's going to be extremely volatile, and it's going to be extremely nasty, right? I really believe that, and I'm not here to, predict what the UK voters are going to do. I'm here to tell you that if the UK decides to leave, the market is positioned the other way, and that spells a lot of trouble in my opinion. If the vote is to leave, okay. Now, again, and I don't think that's going to be the case, but that's I think the risk. All right, now if you look at the Swissy, so the Swissy, we're still in that 95.70 to 97.80, 95.75 to 96.85 range. So let's see, 95. Okay, support is 0.9575. Resistance is 9685. The numbers haven't changed. What's interesting though, this maybe tells you the underlying nervousness of the market. How the Swiss franc is actually still pretty well bid. That maybe is a decent indication showing us that the equity markets and the currency markets are showing are showing that the market is expecting a remain, but there's still some hedging going on just in case. Just in case I'm buying some Swiss francs, just in case, that sliver of risk, that might hit us. Anyway, so let's go. And this is one of those. I think this is one of those plays that if there's a vote to remain, you want to buy the Euro Swiss or Pound Swiss still to a certain extent, or at least those are going to rally. The Swiss franc will sell off. Let's go to the dollar yen. Okay, so the dollar yen, interestingly enough, with all this move higher in equity markets, how in the hell have we not taken out 105.50? How's that even possible at this point? We have 103.50 here, 105.50, and how is it that we have not rallied past 105.50? Again, maybe this is some hedging going on in the currency market where people are like, yeah, well, just in case, I want to make sure I own some yen, and I want to own some own some yen and be short some yen pairs, just in case. Maybe that is what's happening at the moment. All right, hold on really quick. All right, let's go over to where are we at? Dollar Canadian. So the dollar Canadian, interesting. It's come off a little bit, even as crude oil has reversed. And I actually got let me take you over to crude first. So CLQ6, right? So take a look at crude. Here's your daily, basically probing that 618. Here's your 4-hour. Okay, not an engulfing candle, but still pretty bearish move. And here is here's the hourly. Okay, big reversal here in crude oil. Yet, and crude's really selling off at this moment. And I guess my question is, well, why isn't the dollar Canadian? Why isn't the dollar Canadian showing some signs of life? So here's the dollar Canadian. It's just sitting down here. I guess it's near support. We could mark it up as support pretty soon. But regardless, we're at the apex. We're in a triangle as well, which is going to develop some sort of breakout, I'm sure. 127. We had written down yesterday 127.25. Today we can probably stick with that, right? 127.25. I'm going to tell you, if we dip down there, I might actually get long some dollar Canadian, dipping down there. All right. Resistance is 128.25 and then 129 if we could break that, but 128.25 for today. And we are in a range. Yeah, I'm surprised with how weak the crude is, that the dollar Canadian hasn't gotten any lift. But then again, what actually is happening right now that is making sense? Is there anything right now that's really making sense? Are correlations really working? I think a lot of this is just positioning ahead of tomorrow's vote, right? Okay. Let's go over to the Kiwi. So here's the Kiwi. Kiwi just spiked up to new highs. Didn't we write down 71.75 as resistance yesterday? I could have sworn that's what we wrote down. Somebody tell me what was the bias chart? What was the bias chart resistance for yesterday? 71.75? Right. That's the previous support right here, right? Previous support right here. 71. So we're there right now, right? Right. I don't know if we're going to hold, but 71.75 is resistance, and we're there. Now I'm going to put in a range, but man, the Kiwi has been pretty damn strong. I mean, we even had a false breakout yesterday. We couldn't capitalize on any downside, and we're just pop right back up again. For why reason, I have no idea. Other than, the market again is probably just preparing for a remain and saying, okay, well, if we're going to stay, then it's a remain. Maybe I should just put it as bullish, unless we take out, we really have to take out 71 cents. So what I'll do is I'll just, God, I don't want to do that just yet. It's tempting, but you guys know I'll just reiterate everything that I've done. We're right at resistance. We have trend line resistance. You can draw it like this, draw it like that. We're basically at resistance here. We got a 38% retracement here, 618 here, depending on how you what data feed provider you have from those lows. Those lows might be different, so you might be more like this, and the 618 says 72 cents. But regardless, we've got a confluence of resistance up here at 71.75 and at its previous support. So we just knocked our head into it, and maybe it does reverse here. I don't know, but I think it'll continue to stay bid until we break back below 71 cents, though, regardless. All right, let's take a look at the Aussie. So the Aussie, hey, this is almost a cup and handle, minus that craziness right there. Man, if it wasn't so jacked up right through here, I would say that was a cup and handle pattern. But trying to get aggressively long right now ahead of a Brexit vote, yeah, I don't know if that makes a whole lot of sense. We have resistance here. What's the high right there? The high is 75.12, and then we have 75.50. So I will write down both. Oops. Okay. And we are in a range as well. Support is key at 74.50. That's key. All right. All right. When I get back, we're going to do the dollar index. We'll do the we're going to do the dollar index, peso, Swedish krona, Norwegian krona. I'll take some questions when I get back. Don't go anywhere. Thanks everybody for being here. Hi traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So, wow, US dollar, Swedish krona hitting new highs? It's interesting. That's interesting. In this slow market, that's, like I said, kind of interesting. We'll take a look at it here in just a second. The Kiwi turn from that resistance. Aussie's not really turning. Aussie's just kind of sitting there. Pounds jostling around. The Euro's rejected 113. Canadians catching a little bit of a bid, following the weakness in crude, but not really too much. But let's start with the peso. Okay, so here's the peso. The peso's been pretty messy. I haven't been doing anything with the peso. I do, and I will say that on an exit, a Brexit, we could spike past 20, and I am a seller up there. I've got all the numbers written down. You guys know my kind of battle plan with the US dollar, Mexican peso. A move up towards 20 or above 20, I'm going to start looking to sell. Yeah, so anyway, that just some food for thought there. But on a stay vote, my assumption is the dollar peso is probably going to get hit. I'm really not too sure what to do with it in the near term, though. I mean, this because here, let me. What I probably should do. Let's just delete everything. Okay, and I'm going to start over here. So we are stalling. Okay, above 19. So any move to 19 today is obviously going to be, that's resistance. This 1850 is support, and now that is a 50% retracement. You can see it's a 50% retracement. Or no, I take that back. Oh, 50% retracement's right here. So 618 is at 1845. It could be flagging, but I don't know. I would probably be very cautious getting too aggressively short down here. So I think you play it between 19 and 1845 and just kind of 18.45 and 19. Whoops. Kind of stand aside here. I'm going to put it in range right now. It has been very bullish recently, but I'm going to put it in range just because we've made a lower high on this move. All right, let's go over to, and I forgot the dollar index, so let's go ahead and do the dollar index really quick. So here's the dollar index. The dollar index had a bullish engulfing candle yesterday, but we couldn't, at least not yet. Now, it's still early today. It's, the day's not over, so we haven't been able to capitalize on that bullish engulfing candle, and that supported the 618. That is supporting at the 618. Resistance is at 94.25 again, and then support is at 93.45, and I think we just have to stand aside, really. 93.45 and resistance at 94.25, and we are in a range. So just going back to the dollar index really quick, just realize that this is a bullish engulfing yesterday. No follow through yet. I say yet because it's still early today. Support obviously is the 618 of this move, still holding. Resistance is, we still haven't gap filled here. I guess we did gap fill. That filled the gap, but still there's going to be previous support right here at 94.25. So just actually it's 94.20. Be a little bit more granular on my analysis. All right, here's the US dollar Swedish krona. Let's do that really quick. Or here's the US dollar Swedish krona. We were just hitting new highs moments ago. I don't really know what to do with this one other than and the gap fill, if we do decide to fill a gap, is at 832. Support, any move down to any move down to 817, and then we have 832, which even if we fill that gap, you probably maybe use that as a short somewhere around there, but I think there's a lot to do here. 817, 832, 817, 832. Range. Let's go on the Norwegian krona. Norwegian krona, nothing's changed here. Everything's actually still the same. 811, 850. I think those are pretty close to the same numbers we had yesterday. Okay. Range. Okay. And by the way, is that the Is that the Aussie at highs? Aussie is at highs. Interesting. Dollar Canadian's just a couple pips from lows, even with that little sell-off that we saw in crude. Dollar Canadian, remember we have CPI coming out in 22 minutes, so maybe that'll influence the Canadian a little bit. And by the way, the market's looking, oh, it's retail sales. I'm sorry, it's not inflation data, it's retail sales. Market's actually looking for a pretty strong bounce back in Canadian retail sales today. And maybe that's the reason why the CAD has got a little bit of a hop in its step today. You know, a little bit of a bid there. All right, let me see if I can take some of your questions really quick. Ooh, Matt, and Matt, I'm going to reread what Matt said earlier because I completely agree. Okay, so it says, can you please tell me how this logic is flawed? If we get a Remain vote, which again I think we are going to get a Remain vote, nothing has changed for England/Europe, and the global risks have been reduced, thereby heightening a chance of July rate hike. Therefore, a spike higher in the pound and the euro dollar should be shorted. Thanks. I agree with that. I don't know about shorting. Well, I don't know where to short the cable. You know, like I don't know if I mean I can look at the pound and we can try to figure that out, but the pound's going to be a little bit harder to gauge than the euro. Like I said, I think the euro, any spike up to 116, you got to use it, right? In the pound, I just don't think it's as easy and as cut and dry. You know what I mean? Because I think a move up to 152 is possible. Okay, so 150, 150 to 152. Let me take this fib here. That points us to about 151. I mean, that seems like a, you know, there's a confluence between the 38% retracement and the 618. Okay, that all comes in around 151. So perhaps a stay vote. You know, we spike up to 151, and then you use that as an opportunity to sell into strength, right? Speaking of the pound's almost back at 147. James writes in, he said, Murdoch, the Sun tabloid, is backing a Brexit. Headline today reads like this. Queen asks, give me 3 good reasons to stay in the EU. Answer, sorry ma'am, there is none we can think of. Next, and this could be important, Windsor is hosting a VIP dinner tonight. Looks like as if the vote will be decided after this event. Nobody really cares about the real outcome. This will be decided by the powers behind the curtain, and it's a very close call. That's from James. And the people will have their say. Well, excuse me. The people will have their say. You know, whether or not they'll be heard, I guess is the real question, right?